I started by risking just $50 per trade. And over the next 10 trades I'll show you, that turned into over $21,000 in profit. This was using the same simple strategy, executed the exact same way over and over, just slowly scaling up over time. In this video, I'm going to show you how this progression works. We'll start with one of the bigger trades where I made over $4,000 so you can see what this looks like at scale. Then we're going to rewind all the way back to the beginning, back to the $50 risk trades, so I can walk you through every single one, what I saw, why I entered, how I managed it, and how small controlled risk compounded into something much bigger. So by the end of this video, you will know exactly how to execute this small account growth strategy yourself. And the best part, you don't need a massive account to do this. I'm trading this using futures on the platform called NinjaTrader. And with micro contracts, you can control risk down to a really small amount. Even practice this on a demo account. This is about starting small, proving you can be consistent, and then sizing up when you are ready. So let's jump into a quick overview of this strategy so you can get a basic understanding, and then we'll dive into how you can grow a small account yourself. So I found it way easier over time to just look for key areas of support and resistance in the market and bet the market is going to reverse off of them. That's all I trade. I don't trade continuation patterns. This shift completely changed my trading. I was able to, instead of being reactionary to the market, I started to wait for the market to come to where I want it, which made my trading way more profitable. So when it gets to a key area that I think the market could reverse, I just have a simple step checklist I use every time to confirm to get in a trade or not. Rinsing and repeating this every single trade and day. So the first thing I do every morning is I open my charts and look at a 15-minute chart of the S&P 500 futures and the NASDAQ futures. I look for key swings in the market to draw areas of support and resistance off of those, so when the market opens, I can identify where they are. I have another video that goes way more in depth into drawing these key support and resistance levels. If you want to check that out, you can look for it right here. And then once I've identified those levels, I go into a 1-minute chart and look for a few key steps when it hits that level to see if it's going to reverse or not. And then I'll take a trade in that reversal direction. So here's an example of a real trade I took where the market had come down to this support zone. And so what I look for is I go to a 1-minute chart because I want to see what the trend looks like into that level and then read into the candlestick patterns that happen. And so what I'm looking for here is, as I enter this trade, is the first biggest thing that I needed to see is this downtrend be broken. I actually had a trend line here. You can see that that market is clearly broken that. And the first thing and the most important thing is that that happens, because the classic thing of the trend is your friend still holds of if this is going to just continue lower, it's going to continue lower no matter how good of a support zone you're looking at. And so I don't want to be paying attention or jumping into a trade if it's just going to continue lower. And so that's the first signal for me that a trend is going to potentially shift, is that the bigger picture trend is reversing. Step 2 is that you have a big move down into that level. So if we look at here on a 5-minute chart, you can see that the market actually opened up here and then it had 3 big candlesticks down where it essentially ripped down lower in about 15 minutes. It made a big move very, very fast. And so I call this an unhealthy move. And because if that happens and the market makes an unhealthy move down, well, it's likely to reverse that move very quickly too. And so this is what I call a catalyst for a good trade to potentially happen. And so if that aligns up as well, that's another thing checked off my list of, okay, this is a good potential spot to take a trade. And so the next big key step in this is looking for a candlestick reversal pattern. And what that is down here you can see there's a head and shoulders pattern. Essentially what this is showing you is that the market has made a bottoming pattern where it's attempted to go lower, it's bounced, and it's continued that trend. And then what this move right here shows you is that it's now reversing, making a higher low, and it's starting to trend upwards. And so that's what I like to see near this level after a big move down and when that move down was unhealthy. Now, the last thing is what I've discovered after a long time trading is timing in the market. After the market opens, on my chart here, it opens up at 7:30. So 15 minutes after the US stock market opens, or 30 minutes, is when it can likely have timings of reversals. And so you can see here on this day, 15 minutes after the market opened, had this flush and it reversed pretty much dead on that timing. And so these don't always happen, but again, they're areas to look out for. And if you combine everything together here, it makes it way more likely for something to happen. That's the whole idea of this checklist, is that you're stacking things on top of each other that increase the probability of a potential outcome. And then the last thing to actually jump into this trade, if I go back to the start of this trade, is how this head and shoulders finishes forming. The idea here I want to see is this higher low in the head and shoulders pattern. I enter in on a bullish looking candlestick. If there's strength behind it breaking this swing high here, if it breaks this high with strength, I want to get in on that. And so you can see here, it breaks that. I put in an order and then it fills me and I jump in on a trade here. And then I move my stop loss up below the low of this big candlestick because I think that this big bullish candlestick is a good enough confirmation, because as this candlestick finished forming, it's a strong candlestick. And so if the market gives that back up, it's more likely to just continue lower. And I just want to be out at the trade. You know, I'm wrong. Trade didn't work out. You know, this isn't a 100% win rate strategy, right? Nothing is. But over time, the idea is that I'm risking, let's say, one risk of, let's say, like $100, and I go for 3 times my risk a lot of the time. And so that's the key important parts of this strategy. And then to manage it, what I do is I like to let the thing move in my favor a little bit, because the market, even if it moves up here, it could have a pullback, and I don't want to go break even too early because it could just be making higher highs and higher lows in an uptrend, and I would have closed out early and missed the whole swing. And so I like to see it move up to somewhere up here, like 1.5x. Really depends on the market, and this is something you'll get better over time once you get better at understanding these markets and trades and how they move. But you know, once it kind of gets up there, you can see there I moved my stop to break even, because, well, if it gives this whole swing back up, that's a huge move, and there's no point in letting it come down on me even more and losing actual money on the trade. But now I don't lose any money, but also, you know, I would rather not let the market come all the way back on me and, you know, lose. I'm up already basically $3,000. And so there's a definite skill that comes to managing trades very fluidly, and it changes from market to market. And so with this trade here, the market was looking very, very healthy. My initial thought was, okay, well, this is where the market opened. We might come up here, and I drew a little zone here. We might hit this zone and then sell off. And so what I want to see is I want to see the reaction to this zone. I want to give it a little bit of wiggle room. I want to allow it to have a little bit of a pullback, because I think maybe there's this uptrend in play. And if it comes back, pulls back, and then continues higher, amazing. You know, that's a healthy move in the market, and that's totally understandable of it could happen. And so holding through that little bit of that pullback makes a lot of sense. And so from there, though, once it kind of starts to break higher and this pullback is more confirmed, I move my stop up to here below essentially this pullback here, because what that does is, well, if the market decided to double top here and sell off, well, I want to just get out of the trade. You know, sure, I haven't made as much money as I'd like, but it's still some, and I did capture some of the swing. With these trades, you don't know how far the market's going to move. It could, you know, shoot up here crazy. Sometimes that'll happen, or it'll just move a little bit like this and then start to go sideways. And so adjusting for every potential scenario is very important when it comes to trading. And so here, the thing just kind of chops around for a little while and then continues on that trend higher. And so what I look for here is it starts to have a very big move up here. And so now we're getting up to more of what I would consider to be a bigger resistance zone, and it starts to pull back. And so what I do here is you can see that I move my stop loss up below the low that this forming candlestick made. Because I think if it pushes up here and pulls back, this is almost an unhealthy move of a candlestick. And so I think it's likely to sell off. And so it sells off here, it closes me out at about $4,600, and I move on with my day. And so that is a really good win, and what I'm trying to consistently do every time. And if you want a good reference guide for this strategy, I've made a free PDF that you can download via this QR code or in the link in the description that will walk you through every part of this strategy and each step, so you don't have to create notes for yourself. Okay, so now let's rewind the clocks, and I want to walk you through doing this on smaller trades so you can know exactly how to do this yourself and how it's possible with a small account, risking $50 when you first start. And so what I'm trading here is I'm trading the micro NASDAQ. And so what this does is it's basically a futures market that is 1/10 of the normal size. And so what this does is it allows you to trade futures that are normally really big size with a small account, and you can get the leverage that allows. I don't want to go too much into how futures work because it is a whole video in itself, but I'll link above a video that will go in depth into how futures work. I have found them way more powerful than anything else like stocks, options, crypto, Forex, because they allow you to trade really small accounts, and then the way the platforms and brokerages are set up is really favorable for you. So going into our checklist, the NASDAQ here is sold off overnight. And so here at 7:30, that's when the market opened during this time zone I was trading, and it kind of chopped around. Now it pushed higher, breaking this downtrend, also showing some strength. And so my inclination with that is, okay, well, I see a potential for this to reverse higher because this downtrend is starting to shift and break, and it's showing me some strength this morning. There is a bigger picture support level here too. It's just not on this chart for some reason. And then, as well as that timing is right here. If you think about halfway between these is a 5. So here is 7:45, 15 minutes after the market opened. That reversal timing is also coming into play. And so what happens here is the market makes this double bottom. At that reversal timing, there's been a little bit of a flush down here. It's not crazy big like the last trade we were looking at, but this is a nice confirmation of a double bottom, a new swing high. The market's essentially retesting this level, and then I'm looking for a bullish candlestick to essentially reverse this big candlestick. If we get a reversal of this candlestick, that shows you that this big candlestick was essentially a fake out, and that is a huge, strong signal for when the market breaks above this, that it's likely to actually reverse higher. And so the market makes a little bit of a pullback here. I put in a buy stop above this candlestick. I like to use buy stops because I like to enter in on when the market essentially confirms that momentum is happening in the other direction, because the market could put in a high here and then it could pull back here and then keep going lower. And so in that sense, it would be making a pullback here and continuing the trend lower. That's a confirmation that the trend is continuing to the downside. And so I actually don't want to get in there. And so that's why I wouldn't like getting in on a limit order down here. But if the market comes here, pushes up, and then pulls back and then breaks that, I think it's very likely that it's going to continue higher. And so I get in with 2 contracts there. I put my stop down here, and you can see this number is a lot smaller than the first trade, because I'm risking here about $50. And so letting this play out is the market kind of bounces around a little bit, and then it moves up further. And so it tests this high. That's where I like to go to break even, because I think, well, if it's going to come up here, it could sell off. You know, thinking about this day here is it's been pretty range bound this whole day so far. And so in that case, well, I want to be aware of that the market could actually just stay range bound for the day. And so I want to close out at break even and not lose any money if that's the case. And so that's where coming into watching all these different trades and realizing every trade and every day is slightly different. You're going to learn something different. And so that's where this moving that stop loss was very important in case the market did that. But that being the case, letting it play out. It moved up higher. And I wanted to see if it would, move up to this resistance zone. That was my initial target. And trading about $50, I'm up about, 2-3x here. And so just letting this play out, I had a limit order right here at what I thought was a good price to close out of if it spiked up there. Essentially, that would have been 3 times my risk. If you think about my risk like this, I don't have my drawing tool that I normally use on this screen. And so the market pulled back a little. There's kind of this uptrend I'm looking at. And I'm thinking, well, if it holds this uptrend, I actually want to stay in. And so realizing though that it looks like it's going to actually reverse this and close out, I moved all my stops up here and close out of the trade fully for about $250. And that was risking, about, I think it was a little bit more than $50 here. Maybe it was 60 or 70, but 2-3 times my risk was a really nice swing. And so again, as well, we didn't really go over this, is then I'll just be done for the day. I'll be done after that trade, 30 minutes. I'm literally watching the market for 30 minutes in the morning sometimes, which is really, really awesome for having this be, a part-time thing where you can go about your day, do other things with your life. This can essentially be an easy, manageable side hustle. And so here's another example that I'll quickly go through. So this is a big important thing about this trade is you can see right here, 6:30, which is an hour before the market opens. This would technically be 8:30 Eastern Standard Time, is there was a huge spike up here. And so this is because market news came out. And so this is super important to do every morning as well. Just type in Forex Factory Calendar in Google and it'll come right up. All this does is it shows you the news that is happening that day. It'll essentially have on here, here's a green arrow showing you what's the next news. This is news that's already happened before today or the days before. And then this is news that is coming up in the next days. And so every morning I come in and I look at this and I actually put on a filter. If you go up here to the top left button, a filter, and I only have US selected because I'm only trading US markets and those are what impact it the most. And so what you want to do then is look at, okay, and this is set to Eastern Standard Time. So the market opens up at 9:30. Let's say for tomorrow, the market's going to open at 9:30. So 9:45, 15 minutes after that market open, there's going to be some news. And if you highlight over this little yellow, I don't even know what this symbol means. It's maybe like a little factory, I guess. That makes sense. Is it says it's low impact expected. Or an orange one is medium impact, and a red one is high impact. And so those you want to pay attention to. Okay, at 9:45 we're going to have minor news come in. Most of the time that's not going to do much to the market compared to something that is high impact or medium impact. I would highly recommend always watching those because those are likely to have a big impact. Or if you have multiple news releases at the same time, that is even more likely to have a bigger impact, especially if they are red and orange at the same time. And if you notice is the 9:45 and 10 a.m., that is my reversal timings as well, that 15 minutes and 30 minutes after the market opens. So those are huge times in the market to be looking for news to reverse. Now this one was pre-market. You can have those, and generally what happens with pre-market news is it'll have a big spike and then two things will happen. Either it will hold and be really strong and continue higher, or it'll start to do this and it will need to essentially fill this move. It'll essentially have to recover this whole move at some point. Now that can take a while. You can see here pre-market, it was kind of choppy, and then the market opens here, sells off, pushes higher, comes up to this high, which is I would consider to be a big resistance zone. The market will likely retest this level, even if it's going to sell off. And so here you can see it starts to, I've got this uptrend here, super tight uptrend, but the idea is look at every one of these green candlesticks is very bullish. And so that's broken when the market starts to have a bearish candlestick here, another bearish candlestick. It starts to kind of go sideways. It's losing steam when it's near this reversal area. And so that coming into play, is giving me the idea of, okay, we have a big push up here that was unhealthy because there was no pullbacks in it. And so that's likely to reverse. it's at a reversal zone. Now all I'm looking for here is that final confirmation. And so this is a big bearish candlestick. So I want to get short as it breaks this, because I think that, well, it could continue lower. Now, a little bit better of an entry here actually would have been waiting for this next candlestick to essentially pull back some and then entering in on a break. That's something I've done a little bit better over time, but that doesn't mean getting in short on this big bearish candlestick is wrong. This is just a little bit, you can see here, this is what can happen if you have a chop range and a big candlestick forms. Well, the next candlestick can reverse it as essentially a trap. And so what I like to do now is wait for this next candlestick to form. And if it goes all the way up and then reverses, I'll get in short. And so here, it almost kind of got knocked me out. And then, the big picture play, that's why the big picture is most important. Micro candlestick patterns aren't as important because the big picture generally will come into play at most. So here, I'm about up 1 times my risk here. And, I'm up about $70. And so I'm risking about $70 on this trade. And the market then continues to move lower, has a little bit of a pullback. I go to break even because the idea with that is, well, maybe we're just in this choppy range. Here is a minor support level where the market's bounced twice, 3 times. Maybe it's just going to come down here, test this, and move back up. And so that's where, again, reading the market pattern that specific day is so extremely important to how you approach trading. And that's where being flexible to what the market is doing is extremely important. But you can see here it played out in my favor, moved down. I started to see, okay, there's a downtrend here. I'm gonna actually move my stop down some to capture some potential profits if it pulls back on me. And then, it's just waiting to see if it continues lower. And then it makes this pullback here, breaks this low, and that's when I move my stop below. Because that, to me, that essentially confirms that this swing lower is in play and it's a good swing low to confirm. And so here it starts to get, like I was talking about before, is this move up is gonna give back all the way in. So in the sense, that's making me a target. I'm assuming that the market's going to bounce somewhere in this area. I'm expecting this move to reverse. And so once that's reversed, I want to get out of the trade. If it continues lower in this extreme fashion, great. But if it's going to go down here and pull back, I don't want to give it that much room because it's likely to reverse off of here. And so I want to capture as much of that move and much of the profits as possible. And if it's going to pull back here, looking at these candlesticks at bottoms here, if it's going to come down here and then break this high, I just want to get out. Even if it hasn't necessarily broken this downtrend, it's close enough to the zone I like. If it's going to continue lower, I think it's likely to keep continuing lower. And so I actually get out here, I believe, on essentially it pulling back. And so make about $200 on risking, again, about $60, $70. You could trade smaller. The NASDAQ is a little harder to go even smaller size, but on the S&P 500 futures, you can actually risk even smaller. And so here's another example, and I've actually upped my size here. And so this is, again, showing you that you can slowly scale up and increase your trading size. And so here, I'm risking about $150 on this trade now. And this will help you see as we scale in these trades, all I'm doing, again, these look the exact same. But the beauty of trading is scaling the size. And instead of making $100 from this move, it turns into $300. And so same thing, just to quickly walk through it, because I know it's going to get repetitive, but that's how trading is there's a big spike lower. We're still on the 7:30 market open time frame. The market sold off, and now we're looking at that 30-minute reversal timing. So the last two were reversing around 15 minutes after the market open. This is where the market's pushing that 30 minutes. Now, the market hasn't reversed here, and so it's still, it hasn't broken this downtrend. And so this is where, as you're trading, you want to be looking at the market and anticipating, okay, if I look for a long here, what does that look like? What am I wanting to see to confirm jumping in on a trade here? Well, right now it's at a zone. What could happen is, just because it's broken through here doesn't mean it's not going to reverse. What I call this is a failed breakout. It breaks out of an extreme low, but then it fails to continue lower and actually reverses back up. So it's okay to break the low of the resistance or support zone. And then there's this downtrend still happening. And it doesn't have to happen exactly at that reversal timing. Think of it as a good rule of thumb and kind of a zone to be thinking about. Just like these support zones, I want to see it reverse in this zone of time. And then from there, it's waiting again for the market to break the trend. And so here, actually, I do something a little more aggressive because I saw this as this big bearish candlestick as a final attempt to go lower. And then the market got a little sideways here. It made a low here and it started to bottom. And so this is essentially a micro head and shoulders. You can see here's a shoulder, here's another low, and then here's a higher low. And so, it's still making this pattern, but on a very tiny scale. But I like that because of how rapidly this moved down into this area that I was confident that it was more likely to reverse. And so when it lost steam here, I entered in, put my stop loss below this kind of chop range because I thought, hey, if it breaks up here and sells all the way off, I think it's, the trend's likely to continue lower. That totally happens. And then it punches up right away. And so in that case, I'm thinking, okay, I've upgraded my size. And when you size up, it's going to be a lot right away. You're going to feel intensity. Seeing this money on the chart, I would suggest trying to hide it. But seeing yourself being up a money way faster than you're normally used to is going to cause you to want to overmanage, like moving your stop loss up quickly or getting out on a limit order quickly. And some of those things are okay. The idea here is what I did was I said, okay, I'm up new size. This is a lot. I'm going to scale out 2 of my contracts. Right here, I have 3 contracts in the trade. And so the idea is I'm going to scale out of 2/3 of the trade if it moves up here in a very fast way. And so here it essentially moved up, made another huge candlestick. I actually moved this up just in case it really spiked, but it started to slow down and I closed out. So I closed out $200 worth. And then I just had 1 contract left. So I had already captured $200. And so this is how you can start to fluidly manage your trades is, I suggest trying to go for just a 2 times fixed risk reward initially and having your fixed stop loss, and then maybe moving to, break even once it gets kind of close. But, you can see why I do certain things. And then here, my thought is, okay, well, I still think that this has the potential to reverse to the market open, which is all the way up here. And so that's a big move. And so I'm going to let, I've already captured $200. I'm happy with that. If it comes all the way down and knocks me out at break even, so be it. But I'm going to let this have a little bit more wiggle room to see if it can get going here. Now, in this case, I'm up $200 now on this 1 contract. If I had, if I held on to my other 2, you start thinking, oh, I'd be up, $700 or something crazy, right? Which would be huge size at that point. But, you got to remember, hey, it was good to take that off. And if I'm capturing the rest of this, even with 1 contract, I'm kind of doubling how much I was up. And so, it spikes up here and I say, hey, that's a lot of the move already. I would only be expecting it to come up here a little bit more. I might have to hold through a big pullback. I'm just gonna, move my stop up right below this candlestick that pulled back because I'm okay holding through a micro pullback, but I don't want this to turn into a big pullback. And so I believe it just, pulls back there, knocks me out at another $250. And I think that trade made about $460. And so that's, again, a good 2 to 3 times my risk off of, again, scaling up. And so instead of making what I was before, like $200, now this made $500. And so that's a huge thing of remembering that you're working towards scaling up. It's not going to happen super fast. But when it does, it'll be really, really rewarding going through that process. Here's another super quick example before we size up again. 7:30 market opens, spikes up into that resistance zone. We made a pullback here and then a little pullback and then another high. So I'm still thinking, okay, I'm not jumping in yet. But then it pulls back and makes a lower high, makes this nice bearish candlestick. Again, thinking about the candlesticks confirming your entry. So I enter in below the close of this candlestick. And then if you can guess where my target would be for this is the market open right here. Market opens here at 7:30 my time, 9:30 Eastern Standard Time. And so, I'm expecting to just give this move back up. Even if, the market has a huge trend day where, way further down in the chart, it just trends and sells off for, thousands of dollars. That's not what you're looking to do here. You're looking to just capture this move. And if you capture that move, and I'm risking this, I think this trade is actually still smaller size, actually looking at this. I'm risking about $100 here versus that last trade was a little larger size. And down here would be 5 or 6x. And so, I put in, I put in down, you can see here, there's a box. I put in this limit order, and this happens really fast here, is all of a sudden news spikes this thing lower and fills my limit order at that crazy level. It happens so fast in seconds that the trade closes. And so this is why having limit orders can be useful sometimes, because actually if you look at this, that was 8 o'clock news. That was 30 minutes after the market opens news, that 10 a.m. news Eastern time. And the news came out, spiked lower. That's why I put that limit order there, because I wanted it to come here. And hey, if it goes down here, so be it, right? I don't know that's gonna happen. That's hindsight talking. But if I get out in this area, I'm super happy, because that was, if we go back to try and look at the graphic before it closes here, I think it goes up to, here's 345, and this is still glitching lower. It moved so fast. And so it was a huge amount of profit on that trade. But that's why having that limit order there, anticipating that news, which is why you really need to be looking at that and aware of that as well, is really important. And in hindsight, actually something I should have done too, is I should have moved this trade to break even, because in case it spiked the wrong direction, because otherwise it could have spiked the wrong direction and knocked me out at full loss when, that wasn't really necessary to take that risk. But, I'm always improving as well. Now, let's switch it up a little bit. Something I want to show you here is you can trade this on other time frames or markets. So what I'm trading right here is gold futures. Gold futures are super popular recently because they are going crazy recently. You can see this trade was from months ago where gold was at $3,000 an ounce. Now it's, at $4,000, $5,000. I don't even know by the time you're watching this, who knows where the bubble goes, right? But so also I'm trading on a 5-minute chart. And so what you can do is you can scale and trade on a bigger picture time frame if you want a slower type of strategy. I like that more fast-paced 1-minute chart focusing on the NASDAQ futures and the ES futures, because that 30-minute timing in the morning has worked really well for me. But I've also had times where I've looked at, here's gold on a 5-minute chart, and I'm looking to, you see a double bottom here. There's a trend that's broken. There's a major support zone here. It's just not on this recording chart. And then I'm just looking to see, okay, well, I think the market's gold here is going to reverse this move down and go higher. And so these kind of trades take a lot longer time just because it's on a 5-minute chart. And so you have to realize that when you're trading, over this, each candlestick here is 5 minutes. And so this is, 45 minutes, an hour just to make this kind of move. But another thing here is you can see I'm a lot larger size now. I'm risking about $500. Here's 1x. And I'm up probably about that same amount. Visually, it looks like I'm about. And so I'm risking $500 here. And so this is on the micro gold futures. And so you can be trading this as well on smaller size if you want to trade things other than just the indexes. And so once this gets going, just like always, move up to break even, because hey, if it pulls back after making this nice move up all the way down to here, just call it for the day. Don't get married to a specific trade. There's so many times where it looks amazing, and it's even on a big picture, it's, oh wow, I've caught a huge bottom. There's so much potential for it to go up to, $8,000 a coin or an ounce. And, if I hold on to this, I'll just make a crazy amount of money. The market doesn't like to play by those rules. And a lot of times, even if that theory is right, trading to hold that is way more complicated, because it's more likely that it's going to have a pullback at some point in that and start to maybe look weaker and, have a bigger pullback. This is a nice move up, but based on my theories of having big moves up that get reversed, well, I could see a world where this comes up, pulls back all the way down here, and then continues higher. And I don't want to hold through that whole swing. And so instead what I do here is I move my stop up, and it knocks me out as it starts to pull back. But again, because I'm larger size, I'm okay with taking this trade off here because it's still a really nice win dollar wise. And so you have to keep that in mind as well when you're scaling up with these trades. Here's another example of taking a more bigger picture, longer term time frame trade. And so the market here opened all the way at 7:30, all the way over here. You can see based on the time, we're already past that, had a sell off. And then I'm looking for this major trend that it's had in the day to reverse. And so it makes a bottom here, makes a big swing up here, pulls back, makes a higher low, and then I get in, I put a stop order above this bullish candlestick because I think, hey, I think it's gonna pull back here and push higher. And so from there, I put my stop, always putting my stop below a major swing if it's a long, or if it's a short, putting it below a major swing high. And then from there, I let the market play out. And so essentially if I go to, this is easier to see, if I zoom to where there was a 5-minute chart pulled up, is 5-minute chart, we had a sell off, we had a push higher, and then it basically made just a bottom here, made a higher low. And so what I'm looking to see here is this push to the higher side on a 5-minute chart. And this is of the NASDAQ. And so again, this is how you can trade on a 5-minute if you want to trade something a little slower. And so as it's broken this swing high, I made a new swing high, I moved this trade to break even because I think, hey, if it pulls back again, I'm just going to call it for the day. I would rather see after this big bullish candlestick, it pulls back some. Totally understandable after a big bullish candlestick. A lot of the times, big candlesticks get reversed to about 50% of their move. And then it will continue if it's going to continue in that candlestick's direction. And so that's what I was kind of waiting for. It kind of bottomed a little bit and then moved up. And then I moved my stop up a tiny bit with the idea that, hey, it made a little swing low here. I'll just pull my stop up a little bit more. And then I'm looking for, you see my tool here where I have my risk at $500. It's actually a little bit more because this is for 6 contracts. I'm actually at 7. So up here is probably more like $1,200, but it'll be basically 2 times my risk. And so that's a good target for half the trade. But because it didn't quite get there, I actually moved my stop up here. And so here I closed up about 4 contracts as it pulled back, just because I thought, hey, it got to a good spot. I'll close out some. And so that closed off about $400, $500. And then you see here I have 3 contracts left. And then it's kind of seeing, okay, what is this pullback going to do? Does it have more potential, or is it just going to kind of stall and, I'll just close out? And so here, I move my stop up a little bit more, but you can start to see, if you just look at the candlesticks here, it's kind of just stalling out. What I would want to see is, some follow through in these candlesticks, and it's also broken this trend line. So that's a good signal that, okay, my stop's probably in a good spot. And I'll get out if it just continues lower and I won't move this. And so this is a good situation where closing those contracts out further up actually got me a better price than waiting. And so even here, if you were just going for a strict limit of 2x, sometimes that is actually more profitable than having a more fluid style like I do here. And so there's nothing wrong with, you could always just do a strict 2 times your risk and just be done with the day. If you want to just keep your trading simple, there is nothing wrong with that. That'll make it so you don't have to think about all this stuff while you're managing it. You just focus on the entry, which is honestly 90% of trading anyway. And then, it either works out in your favor or it doesn't. And I would suggest at least moving up to break even once it goes to 1.5 times in your favor, just to, be a little safer there. And again, remember the idea of these trades, going back to more of a 1-minute chart example of kind of my bread and butter and what I highly suggest you focus on is, looking for just these timing windows of, here's 8 o'clock. The market pretty much put a top in here. It's broken this uptrend. It's at a resistance level. And then we start to top here. And so this one's a little funkier than some of the other ones. And so I want you to look at that is here it made a big bearish candlestick. But then I didn't jump in based on a break of that initially. I waited to see how the candlesticks after reacted. and then I got in on a break of that low. And that's what I like as my more newer signal, because a lot of the time is, okay, this is a big swing down. If it pulls back and breaks that swing down, that's strong, because sometimes this will be a bottom. Like here's a big bearish candlestick, but it didn't actually break the low of that. Same thing here, bearish candlestick, broke it by one tick, but it didn't really continue lower. And so a lot of the times in these uptrends, what you'll have is, over here is a great example. There's a big pullback and then the next candle just reverses it. Here's a big candlestick. It's kind of hard to see. Maybe I'll zoom forwards in the trade. It'll show a little better. Is, big candlestick here, big bearish one pulling back, and then the next candle just completely reverses it. Even here, big bearish candlestick, broke a little bit, but then the next, kind of move up completely reverses it. And so what I like to see is, this is a little bit smaller of an example, but the price movement from here to here is pretty good. And instead of, coming down here, bottoming, and then just ripping back higher like it was doing before, is you can see it's changing. Is the market came down here, pulled up, and actually had two kind of choppy candlesticks without much strength to them. And so in that case, I think, well, if it breaks here, well, I think that's actually a good signal to go down. And as well, in that case, I think that helps confirm this lower high. And then, betting that the market's gonna go down. And as well as always, with my target of going back to basically the market open as a great initial target. Now, there's kind of some chop here. And so it's not like some of the examples we've had where it's just a clean move up. This could cause some issues on the way down. And so you wanna be aware of that, is that there's not as much of a void of price movement in this area. There's a lot of back and forth, which generates more stability in that area. And so it makes it more likely for it to come down here and have issues. But, since my stop's up here, I'm gonna probably move break even once we kind of get down here somewhere. And, I have my buy limit here. If it just kind of spikes down there, and I'll move it and adjust it accordingly to how the market's moving. And so here, I'm up like almost $1,000, 2x. And, this is, if you go back in the video and look at some of the earlier examples, this is like the exact same strategy, right? Just more contracts. You can see here, I'm trading 12 now of the micro NASDAQ. And so it pulls back here, I didn't want to give it too much wiggle room. It looks like it's going to knock me out here. And, I'm up about 1x, $700, $600. So I wasn't up that $1,000, but again, always trying to be fluid with the idea that, hey, I think it could run into resistance down here and I don't want to give it too much wiggle room. And you can see zooming forwards a little bit there, pretty good spike there. And so all I was looking for was holding this tight downtrend. And then when that breaks, well, it could shift and move in the other direction. That's what you want to be thinking about with these trades, is what is the market likely to do if it breaks this downtrend or this trend? What does that mean? Will it, what will be the recovery of this? It could totally come back all the way up to here and then maybe it moves down. So at that point, I'm basically back at break even. And so that's how I like to think about trades, of when I'm managing them and assuming what the market is going to do. Now here we're going to jump up to a larger size trade example again, where I'm risking $1,500 on the trade. Now I've sized up again, and you can see triple is now $4,500 on 3x win. And so that is a lot of money, and that's a long ways from risking $50. And so you can see the power of, I'm doing the exact same thing here. The market, now this is a live recording, so I apologize for the chart moving around and stuff. This is a recording of me trading it in real time versus me just having a recording of it that I can easily zoom through. But so what you can see here is I'm doing the exact same thing. The market opened up here at 7:30, and then at 7:45, it pretty much bottomed here. And I got a support zone. It had these big candlesticks here are a big flush lower. And so I'm thinking, okay, that has a good reason to reverse. And if I zoom back here a little bit, what you can see is there's a big downtrend here. And so this spiking lower, I think, is this trend. The market likes to do final attempts to continue lower. Essentially, think about it like a bubble. The market is trending up, it's trending up, and then when it gets to the end of the bubble, where it starts to go crazy, where it just goes parabolic. And the price, like let's say of like Bitcoin, it goes from $1,000 to $10,000 in like a week. And then this move from here to here took months. The same thing is happening here on the flip side. Is the market here was trending lower and lower, lower and lower. It took hours to do this. And then all of a sudden in minutes, it moves this much price where, it took to move that much price. It took, an hour or 40 minutes, way more amount of time. And because it's had this downtrend where it kind of broke and then does that, that is a signal where the trend is going to end a lot of the time. And so I see this as almost the bubble is breaking in the reverse direction. Now this is, it's not what you consider to be your normal like big bubble, right? Where, Bitcoin will go to 10,000, 100,000 and then sells off, right? Those are big picture bubbles. These are what I consider to be bubbles on a 1 minute chart, right? They only happen over like 2 hours, but the market and price can still get overextended in an unhealthy way to have to snap back. And then these red lines I actually put on my chart are those reversal timings I look for 15 minutes and 30 minutes after the market opens. So when it comes down to this level and starts to chop here a little bit, put in a big bullish candlestick, I'm not entering in on this thinking, okay, this is it, I'm going to catch a big move. I'm going through my step entry checklist. I am being calm about it. I am waiting for the market to set up how I want. Like if you literally look at me right here, I am literally just sitting, watching this, listening to music, patiently waiting, seeing what the market's doing. And then when it enters in, or then when my signal actually shows up, then I entering on the trade. And so what I'm looking for here is I'm seeing, okay, I like this move. It's showing big bullish movement. I want to see it pull back. I want to see it make that higher low. I need to see that trend confirmation. I need to see where it makes a higher low, which is to me the structure of the market showing you that it's gonna actually reverse. Instead of me trying to predict, well, okay, it's had a huge move. I think, we're at a support level. I think this is where it's going to reverse. That's not what you want to do with trading. You want to have the market show you that it's starting to reverse. And so here, I'm looking to see, okay, is it going to just bounce up here and move down? Or I put in a buy stop up here actually, because if it breaks this high, I want to jump in because that to me confirms that it made a higher low. And then this swing also got taken out after it made a pretty good pullback in a fast-paced moving market. And so here it takes a minute to fill. But then I, jump in the trade and I put my stop below this swing because I think that's a good spot. That's where that higher low is confirmed. And then from there, I'm looking at 5 minute. Okay, we have a big potential to make a big move up here. But also, I'm going to look at, okay, well, the initial target might just be the market open or giving back this small move here. And so coming into it, that's where, you want to look at the big picture, but you also want to look at the small picture of what's likely, where are those essentially those tiers of levels of where I would either, think the market's going to slow down, or if it breaks that, where could it continue going in? So that's where you can either scale out, or I like to try and hold on to where it starts to actually hit one of those levels and slow down enough that I think it's going to reverse. But other people, that like to say, okay, well, it hits here, I'll close out, half of my trade, and then here another half, and then here I'll close out the rest. And so again, this is just where the beauty of size comes into play. You can see I've entered in here, and one candlestick, I'm now up $1,500 on a 1 minute chart. And so dealing with this is hard. It's mentally strenuous having that much money change in minutes. And so what you have to do is scale up slowly. This is why you start at that small amount. You actually start demo trading first and then switching to real money and slowly scaling up, because that's going to really help you. So when, you're essentially building the foundation and the building blocks of mentally dealing with taking trades like this that are a lot of freaking money and being able to not freak out and say, I'm going to leave my stop down here and I'm going to have a mental stop, and I'm going to be able to do that consistently and not make some impulsive move and go with the reads of what the market's doing, only wait until it gets up here, hold until it breaks this uptrend, because if you just sit here and watch the swings of this money, it's up and down $100, $1,000 insanely fast. And if you read into this, oh, this is a huge spike, this is where I think it's going to reverse, it's very easy to do that, down here and leave all this money on the table. And so that's why you have to spend a lot of time slowly scaling over time. And if you haven't got it yet, this platform I'm using here is called NinjaTrader. I've used it for over 5 years. It's super powerful for, as you have seen throughout this video, managing trades, entering trades really fluidly. You can get third-party add-ons like this one where it helps me target how much I'm trying to risk, and then also, shows me targets of, okay, four times my risk, I'm up 6,000, 3 times I'm up 45. And so they help you a lot with trying to trade and manage. And then these tradable buttons on the screen are built into the platform. And so I highly recommend getting it if you want to trade futures. I'll leave a link for it in the description below, or you can scan this QR code right here. And so getting back to this trade is pretty much same thing as always with my strategies. As I'm looking as we go up, this was the initial target, but we've broken that. So I'm looking at, okay, what's the next one? This resistance zone I've pulled back from, further left on the chart, looking at like a 5-minute or a 15-minute chart, kind of looking at where the big swings are. And as well, looking at this, we haven't really seen this as much. This is such a rapidly moving trend that just like this, being a rapidly moving trend, it could snap the other direction very quickly. You got to take that into consideration. This is a big move up that could snap in the other direction very quickly. And so because of that, I want to be very aggressive with my stop loss because I don't want it to pull back on me this much. That would be giving up, I don't know, $2,000, $2,500. And the likelihood of that happening is higher and higher as it kind of does this. But these trends can also last a long time. And so I don't want to leave that money on the table either. And so in this case, kind of moved up. We had another big bullish candlestick here. And I have my stop right below it because my thought is, well, okay, we've had big bullish candlesticks here and the lows of those haven't been broken this whole move up. And so if it has a big bullish candlestick here and that low gets broken, that is a change of the trend and a change of the momentum. And so right there, I closed out for about 3 times my risk. Super happy with the trade, obviously, at that new size. And that is a super big win under the belt. And again, market opened up 7:30. This is done before 8 o'clock. This trade is 15 minutes and I can, go on with the rest of my day, and you can go on the rest of your day as well with this strategy. And so this last trade here has something really interesting about the management and actually entry that I'll talk about in a second. So here, same thing as always, I've actually changed my timing on my chart. 9:30 the market opens Eastern Standard Time. We have a nice sell-off. And then in this window here, I'm looking for a potential bottom. And so you can see here, downtrend as usual drawn. You can even see there's big rip here. And then just looking at the candlesticks, it starts to just change. It starts to slow down, goes sideways. And so I'm not going to enter in here because this is just a chop range. And quite often when a chop range happens, it can go longer than you think. And there can be a lot of big candlesticks in here that, like I was saying before, they go in one direction and then just rip in the other direction. And so they don't really give you a good signal. They just give you potentially fakes and traps into the market. And so here, instead, I am looking for kind of a head and shoulders pattern where the market bottoms here, makes a higher low. And with this one, you can see here we have this is a huge bearish candlestick. This is, in the ES, this is 10 points basically. That is a huge candlestick. And even compared to, this is a big swing in the day normally, but it's a big candlestick even in relation to these ones. And so what that can tell you a lot of time is, okay, that's a lot of momentum in that direction. Is it going to continue lower? And if it does, well, I think that this trend is going to continue lower and I just won't take a trade, right? I'll stop trading, move on to the next day and see if the pattern I want to see shows up. But if this comes down here and starts to bottom and move higher, well, I think that is a really good signal of a trap to the downside. It's attempted to go lower and it tried really hard and it just gave up and, the sellers dried up and buyers came in and bought the heck out of it. And so that's where I say, okay, that's a really nice confirmation of a higher low, confirming this bottoming pattern at the timing I like, at a support zone. All of these, my checklist is lining up, and then I get in long, put my stop loss below that swing, because again, that's a great spot structurally to say, hey, if it breaks this, it's either going to go choppy sideways or it's going to continue lower. Or even if it does somehow bounce and then continue higher, it just wasn't meant to be, right? And so then I just kind of hold on, let the trade do its thing. I think I'm risking about $1,300 on this trade. And again, my initial target is the highs of the opening swing. And so from here, that takes a while. And one thing to think about and to talk about here is this doesn't happen every day. I'm showing you really good setups where if you can wait for a setup to look like this every time, your win rate and profitability is going to be really, really high. But these don't show up very often. They show up maybe once a week, maybe twice a week, sometimes 0 times a week, depending on, the market structure and, the mode the market's in, right? But that's where the beauty of scaling comes into play. If, I'm not there yet, but you can take one of these trades risking 10 times this. And so you could be up $10,000, $20,000 in one trade. That's going to be my future of scaling this higher. And so if I take one trade a week and I'm up 20K, I don't care, You don't need to be a huge trap that I fell into when I was initially trading, was trying to capture, all these swings in the market. I didn't make money doing that. And instead of, I realized over time is, okay, I just need to wait for this specific strategy to set up. And then I'm going to slowly scale over time. And now I'm finally getting to reasonable size where it can, even if I take 2 of these trades a month, I can still be making like $10,000 a month. And so that's where scaling and the long-term big picture of trading comes into play. And so here's an example of where the market slowly scaled higher. And you can see I moved to break even. And, I was given a lot of wiggle room here because I thought this trend versus compared to that last trade where it just shot up in an unhealthy way, this trend is very healthy. We're having pullbacks, big pullback here, hard to hold through, but then another pullback here, another pullback here. And so I'm thinking, okay, I'm just going to let it pull back on me. And I'm just going to, because it's in this trend where it's just slowly chugging higher. And so even though, a pullback like this is scary, especially after it's broken this uptrend, you got to look to the left, right? The market generally repeats what it does to the left. It had a big candlestick here, pullback, reversed. Big candlestick, pullback here, reversed. Big candlestick here. I'll actually scroll forward because you can't really see that. But big candlestick here, but it, gobbled that up. Every time it pulls back, the buyers come in and gobble it up. And so that's why I'm trying to hold with the swings, and I hold a pretty big pullback here. I think my stop was here before, almost kind of knocked me out, but then gets gobbled up and makes a new high. And so I'm gonna pull my stop up to there. Now, because it's broken this uptrend and it's at a resistance level, you got to think, okay, even though I want to hold on to this trade, again, remember, you can't get married to this trade. And if you look at here, this trade is hours. This was a very long trade. Not every trade happens forever or a short amount of time. I entered in this trade at, let's say, 10:30. 2 hours later, I'm still in the trade and it's still just chugging along. And I'm still, as I'm seeing here, here's the next resistance zone. If it breaks through that, here's the next one. And so this is where sometimes you can capture a huge swing in the market and it can turn into a lot of money. And so here it started to, made a big push up, starts to flag out. I'm thinking, okay, maybe I would assume that this is going to break higher. But if it doesn't, I'm going to look to get out. And so here it actually, this happened pretty quick, but it had a weird spike out of nowhere right here. And so I actually moved my stop loss up to here because I think, hey, that's a good spot. If it breaks this low after that pullback already, I think it's going to continue lower. Because remember, every time it has a pullback, it continues higher. And so this pullback here, even though it happened in one candlestick, it should continue higher off of that. And if it doesn't, the structure of the market's changing and I want to get out. And so here, it eventually knocks me out here at about, I think it's $3,500 down here. But, great trade, but it took, 3 hours, I think, for, 2.5, 3 hours by the time this actually happened. And so that's where, managing it, depending on how it plays out, can be really important. Because if I just traded this for half hour, I would have been out at a lot less money and left money on the table here. And so don't forget to get that free PDF guide that goes over this strategy in the description below. And if you want to dive more into the nuts and bolts of futures, how I read the charts more, and how you can trade them to scale your small account, check out this video right here. It's going to go into every detail for you.